This is Robert Kraft, and I'm your host on SNN Network. And with me today is Brian Lax from Old West Investment Management. Brian, welcome to this Wall Street View. How you doing?
Thanks for having me. Doing well.
It's great to have you on. So, before we start and dig right into today's topic, which is going to be all things uranium, I want to start with your background and how you got to where you're currently at today.
Yeah, so I've been at this firm for about 3 years. Before that, I was an energy analyst at another firm in LA, covering oil and gas, mostly exploration production, but also, across the gamut of energy. So refining, coal, utilities, chemicals, um, but mostly on the E&P side. And so, got a very deep dive into the world of commodities that way, where you have to be mindful of the company and the micro level project, field level economics, but at the same time you have to have a well-informed view on the macro as well. So supply and demand and understanding all those different pieces. And so when I joined here a few years ago, Old West is a sort of your traditional value shop. A lot of the areas they were looking at happened to be in that space, that sort of been left behind in this raging bull market. Precious metals, oil and gas. A lot of those names were trading at distress levels. So we had a meeting of the minds in that respect, and I had been exposed to the uranium idea at my last firm. Our sister fund was a huge shareholder of Cameco, which is the largest Canadian producer. We do own that one. Um, and at that time, they owned, I think, over $1 billion worth of stock. And so we got to meet with management pretty regularly. So when I joined here in 2016, it had been on my radar. Everyone had always been waiting for this thesis to turn. And it looked like we were starting to see the green shoots there. And so that was actually my first pitch when I joined here. That was late 2016. Um, and that kind of brings us to today. We've been doing a lot of work on it. The number of positions have grown. We just about a year ago launched a separate vehicle to focus specifically on the space and other areas like that. But right now, uranium is the main focus.
Got it. Okay, so I really want to dive deep into that uranium investment strategy and really what you guys have going on here for the last couple years. So what is that investment strategy, and really why the focus on uranium, other than
Well,
the fact that you were exposed to
Well,
it?
I think we look at a lot of areas that so-called value. I think one of the places people tend to look are either sectors or industries that have been really beaten up or where the stocks are down. Maybe they're deeply cyclical, but stocks have been getting hammered. And we look at some of these areas and say, look, do these stocks deserve to be down here? Does this industry, is it going away? Is it structurally challenged, or is it just having a deep downturn? And so we look at a lot of different areas. I mean, some of your viewers probably, like shipping or oil and gas is one right now, especially, fertilizer, things like that, agriculture. So we look at these areas and we say, man, they're really beaten up, kind of digging through the bargain bin. Is there future value that we can see? What is sort of the upside versus the downside? Or do these things deserve to be down here and then we just pass on them? And then, one step further, if we do see the potential upside there, what's the time horizon? Are there any catalysts that are going to kind of serve to unlock that upside? And so, with uranium, it's interesting. So the first question is it going away? Does it deserve to be down in the dumps for so long? And I think that contrary to what maybe the popular narrative is in the Western world, Europe and the U.S., that it's this dinosaur that we're getting away from it. It's dirty. It's dangerous. I think what you see when you look at the fundamentals is a very different picture, which is that it's growing. Um, it produces no emissions, and so in this era of climate awareness, it's very popular, and you're seeing a huge reactor build programs, especially in the developing world. So the demand is strong, and yet because the downturn has lasted so long, um, you've seen prices come very low to the point where no one's making money in the industry, or almost no one's making money in the industry. So you're seeing a lot of supply getting taken off, and it's the classic, cure for low prices is low prices, where you're seeing that supply side get cut back at the same time demand is growing, which has produced this big gap, this supply deficit that's going to need to be met. It's not going to happen unless prices come up to the point where it gives a miner the incentive to go develop a project, or at least, I mean, at this point there's idle capacity that can get turned back on, but it still won't get turned back on for much higher prices. And so, the bottom line is it's just a simple supply demand mismatch that's been called 6 or 7 years in the making, maybe 8 years, and we think that there are a number of catalysts on the horizon that tell us the inflection point is pretty imminent.
Got it. Another question that I have too is because there might be some of my audience that, and you alluded to this a little bit already, but they might be thinking to themselves, what is the utility for uranium? It's pretty self-explanatory when you think about gold and even to some extent silver and copper. What are some of the use cases for it? But can you break down very simply, what exactly is uranium used for? And you brought it up a little bit already, but maybe get a full picture there.
Yeah, so it's the fuel for nuclear power plants. So it's used to generate electricity. It does it by heating up water to drive a steam turbine. I mean, just like natural gas or coal is used to generate electricity, it's all just a way to heat water. With natural gas and coal, which are the big ones around the world today, you burn them to heat the water, and that's why it releases the CO2, which is what's such a big problem these days. With uranium, you're not burning it per se. The atoms are splitting, which release energy and heat, and that is what heats the water. And so there are no emissions. I mean, it's you're just essentially using the atomic energy to heat the water, create the steam, and drive the turbine. And so it's a big part of it's over 10% of global electricity production comes from nuclear. Other countries, it's much higher. The U.S. is closer to 20%. Places like France get over 70%. And so there are 30 countries around the world or so that rely on it, and it's a big part. And there are other there are countries that are making a big push into growing their reactor fleets because they are concerned about the pollution, the environment, and the fact that pound for pound, a handful of uranium generates much more than a much larger volume. I mean, it's millions of times more power per unit. So it's an easy way for countries to essentially stockpile their energy needs. You build one of these plants that can run for 60 or 80 years, and you can keep the fuel in a small room.
Right. And my next question here is it's kind of a reaction to a little bit to why you guys got involved in the uranium space a little bit. Would you say that your thesis is it more long-term or short-term? Because it seems like you took an interest in it based on some short-term catalysts where there's going to be a need for more supply to come online. But uranium hasn't been anything new for a long time. People have known about uranium. They've known about the resource. They know about the benefits of nuclear power. But is this more of a long-term approach? Or are you seeing kind of more of this like a short-term strategy that might feed something else in the future?
I think it is a long-term thesis. I think when I mentioned short-term catalysts, it was more about, when we see these types of big structural changes in industry and we foresee a normalization or a rebalancing back to just normal levels, that can take a long time, which is, like you say, people have been talking about this thesis for a long time. There have been a number of reasons why it's been delayed. Our view is that given what's gone on in the last 18 months or so, we think that some of the things that had kept the lid on it and prevented the turnaround from happening are now out of the way. And so when I say, it's a long-term theme with potentially short-term catalysts, I think that's what differentiates it from some of these other areas that we look at. Is we think there might be similar upside, but maybe it's a little further off in the horizon because it's going to take a little longer for those areas to balance. And so there are, it is a long-term theme, and we're essentially playing the rise in electricity production around the world and the move towards clean energy. But what's happened is the downturn has gone on for so long that it's created this mismatch. It's a very opaque and kind of sticky industry in terms of the supply demand levers. They don't automatically adjust for various reasons. And so, the longer this downturn has gone on, the more that the spring has been coiled. And we think, whereas, it has a tendency to overshoot to the upside, is what we saw in the last cycle about 15 years ago. We think it's overshot to the downside. The fact that they're shutting down high quality mines and a lot of low cost production is coming offline tells you that this current price level is unsustainable. And so our view is, okay, in order to fill this gap that we see, which is a fairly predictable demand, you're going to need the supply to come from somewhere. It's not going to come unless the prices are higher. And so it's a pretty simple thesis for us, is that the prices have to rise just to give that incentive for that supply.
Right. And because another catalyst, it seems like, for this major downturn in uranium as well was Fukushima, and that horrific incident, in Japan. I mean, would you say that had a lot to do with where we're currently at today in terms of the uranium pricing and the industry as a whole?
Oh, of course. And that was the seminal event. I mean, I think had it just been one reactor or one reactor complex, we probably wouldn't be having this discussion today. It was the fact that Japan took all of their reactors offline as a safety precaution that was really a big structural dislocation to the industry. I mean, they had 50 or so reactors. That was over 10% of the world fleet. And so you imagine a relatively balanced market where all of a sudden 10% of demand goes away almost overnight. That leads you into the situation of oversupply, and that pushed the prices down, over the following 5-6 years, 75%. So much so where, like I said, there's not a lot of companies that are operating out there today that are making money at today's prices. And so, the industry has gotten much smaller. I mean, there were hundreds of companies before. It was a $100 billion industry. It got down to sub 10, and there's maybe only a few dozen that remain. And so people have really kind of held on for dear life. But in our view, there are still viable companies that are out there today. Sure, they're going to need a higher price, but our view is that higher price will have to happen, otherwise the supply won't be there. And these reactors are here. I mean, and they're building more of them. And so, in our view, is it's just a matter of time. And I think, look, you rightfully point out that people have been saying this for a while, but there are various signals that we've seen that suggest that we're fairly close to a turnaround. And there's some that we expect even in the next coming weeks. So,
all right. So this is a fun question I always like to ask. In terms of looking at a potential investment in a public uranium or private, any uranium company really, what are some of the factors that you look for? And, especially when you're looking at a gold junior or silver junior, a lot of time they talk about grade, near surface. They want to know that they're going to be potentially a low cost producer to bring the stuff out. So what are some of the things that, as investors, we should look for when evaluating a potential investment in a uranium company?
Yeah, so it's similar to some of if you're looking at a gold company. I mean, size and grade are very important when judging projects. That's why the Canadians are so highly favored, because they do have the highest grade stuff in the world by an order of magnitude or two. It's very high grade stuff, which translates into lower costs. I think the way we would break it down is there's the companies that are currently producing. There's a handful of them that are publicly traded. If you go one step further, there's what they would call the developers, who have defined projects that are waiting for the right signal to begin development. And then there's guys that are a little further away, maybe explorers or people that are have found something, but they haven't really fleshed it out into a project yet. And so that there's various different risks to consider at each one of those stages. But yeah, I mean, size and grade is a very important, a couple of important metrics to look at. I think jurisdiction is also important, especially if your viewers have followed what's gone on in the U.S. with this trade investigation. There is concern about where your supply comes from, and not just from a security standpoint, but also permitting. If you're a developer, what's the permitting timeline? Certain places it's very short and easy. In some places there's a lot of red tape. So, you may have a very low cost deposit, but it might take a long time to bring on. And conversely, you have one that's maybe a little higher cost, but the permitting environment is a breeze. Maybe that's what ends up setting the price, because if there is this supply crunch and material is needed, so maybe time to production is more important than cost. And so it's a number of factors like that. We own kind of a variety of those different risk factors, just because we're not necessarily sure how it will play out. We think eventually, like any commodity, the low cost is going to win the day. But if it takes 5-10 years for that low cost to come out of the ground, there might be a move in the price that brings on higher cost material before that. And so we own a little of each.
Mm-hmm. And where would you say are the main jurisdictions for uranium production exploration currently?
So it depends if you mean what you can invest in or what is out there. Central Asia is the biggest producer right now. Actually, their big producer just had an IPO about a year ago, so it is publicly traded. It is majority owned by their sovereign wealth fund. So there is that issue to think about. So that's the biggest producer, and then Canada is another large producer. There's one big publicly traded company, which I mentioned earlier. There are a number of developers. People like Canada, the Athabasca region, because it is such high-grade material, which does lend itself to low costs. That is an area where it is maybe a little longer permitting timeline. But so what's Central Asia, Canada, Australia is a big producer. There's some production in Africa, a couple countries in Africa. The U.S. used to be a big producer. I mean, we're a huge consumer, but the current market dynamics, you've seen almost all the production go away in the U.S. That's one of the things that's currently going on in the U.S. in terms of the trade front is, does the government support the industry? Does the government feel that there's a need to maintain a domestic industry, or are we fine just relying on imports? Most of our imports, Canada, Australia, are from so-called friendly nations, but some of the Central Asia stuff, given the political climate, maybe we don't want to rely so much on that, and that's probably around 40% of our imports.
Got it. So then, where would you say? And you've talked about this a little bit, but I figured I'd ask you one question here. Is what would you say are your thoughts on the uranium industry now moving forward?
In what way? I think in terms of the supply demand, it's one of the most compelling investment ideas that we've seen in a long time. We look at a lot of different things. I think the fact that you have this underlying fundamental setup that's not being priced into the equities is very interesting for us. And so, the way we look at it is we see this price move that has to happen, and the optionality that's embedded in some of these developers because of what their projects are worth at a quote unquote normal price. You get this magnifying effect, and so the upside we see is really tremendous. But the downside we also see is relatively muted because these things are so washed out. I mean, this industry has almost been forgotten, right? You don't see a lot of investor interest in it outside of some people on Twitter and a few boutique mining shops. I mean, you see a little bit of it, maybe some of the bigger names, but really it's just been largely ignored by investors, and that's partly because of what's happened. I mean, it's been such a long downturn. These companies have gotten so small that really not a lot of investors can participate. And so you've seen a few specialist funds like ourselves that are doing a lot of good work on it. But by and large, if you're a big institution, there's only a handful of names that are even available to you. And so I think that's part of it, which has created this opportunity. That, in our view, will reverse itself at some point as more attention gets drawn to it and money comes into the space. That the liquidity will improve, the valuations will improve, and that sort of positive feedback loop we think should emerge. But at this point, there's really no one even looking at it. And even given the fundamental improvement in all the various metrics, the equities have still languished. I mean, most of them are down year to date, some of them quite substantially. So I think there is this disconnect that still exists. But for us, I mean, we have patient investors, we have a long-term time horizon. we think over the next few years, I mean, I'm hard pressed to imagine another area that will outperform this.
Perfect. And then what advice would you have then for new microcap investors interested at looking at the uranium space? How should they approach it at this given time period?
Man, it's been 2 or 3 years we've been down this rabbit hole,
Yeah.
so there's a lot of information out there. I would just say start reading. There's some good resources on Twitter. Just go to the uranium hashtag. There's a pretty lively community that's sprung up where people will share news articles, and there's some smart people there. Most of the funds that are out there have a presence, and people are pretty open about it. You can just all the big the U.S. government sites, the international nuclear sites have great information. World Nuclear Association has some good education there. And you can find information on the companies just by listening to their conference calls, listening to their presentations. Fair warning, I mean, a lot of these guys might lean to the promotional side, and they're obviously going to have a very optimistic, bullish view of their prospects. So take it somewhat with a grain of salt. But I think there are. I mean, especially for microcap investors, that's almost the whole sector right now. I mean, there's only, I think, the two largest guys are probably 4 or 5 billion in market cap. Then you got a couple under that, a couple below that are several hundred million. Below that, everything's pretty much sub 100 million. So, look, it is fraught with risk. I mean, a lot of these guys, because they're either don't have a project or they're not producing, there's no revenue and they have costs. And so the longer this thing drags on, there's that burn rate you have to keep in mind. And so really pay attention to the balance sheets, the cash levels. What is their plan for development? What is their financing plan? Because I think that's been one of the real reasons that the sector has struggled this year. Is everyone's been waiting for this resolution for these trade policy issues, and there's been a few delays. And delay is not what you want to hear when you have a cash burn and no revenue. And so you've seen there's a steady decay to this. Until the market normalizes. So, I think where you want to be, depending on your outlook of when this thing turns, might inform, how conservative way you want to play it. So that, in addition to the miners, there's a few vehicles out there that let you have just direct spot price exposure. So it's almost like the GLD for gold. There's one in Canada, there's one in London. And so, I mean, that's one way to go about it. There's a couple ETFs out there. The U.S. one I don't think is very good, and they changed their construction about a year ago because a lot of the stocks they owned were very illiquid, and they ended up replacing them with a lot of non-uranium names. But there's one in London that's all right. There's another one that I think is launching in the U.S. There's one that launched recently in Canada, and so that's more for investors that prefer just kind of a basket approach to this thing. We've obviously with a fund we've done our work on all the individual names and have created our own weightings. So I would just say start reading. There's a lot of information out there. It's interesting because you get sort of mixed sentiment. There's a lot of fatigue. This, like you say, people have been looking at this for a long time, waiting for it to change. They were saying that 2 years ago, 3 years ago, and so I think. This time it's different, right? Well, so
yeah, right.
Look, our view is that a lot of the things that have kept this market down and prevented the turn from happening sooner are starting to go away. There's other parts of the fuel chain where you're seeing the tightness start to materialize in higher prices. We think it's a matter of time and not very long before you see that go to the primary price. I mean, you've seen it take up this month. Pretty noticeably. So, I think it's there. The fundamentals are there. It's going to take a while for the equities to catch up because there is so much investor fatigue. But as we've seen in the last cycle, when this thing turns, it can turn pretty hard. And we're not making any predictions for a crazy repeat of that. But I think if we get even close to back to a normally functioning market, the equities should do very, very well.
And Brian, where can our audience go and find more information about you and Old West?
So you can go to our website, oldwestim.com. Shoot us an email. We're always happy to talk about our holdings or about just our strategies in general. You can find us on Twitter. We post some of the stuff that we do there, our interviews and whatnot. Always happy to chat. So
Awesome. Brian, thank you so much for joining me today. I really do appreciate it, and look forward to the next update.
all right, thanks so much.
Thank you.